It's that time again, back with another housing market update. And the housing market continues to be ultra red hot. Mortgage rates are low, demand is high, banks are lending, and it's much more than just low mortgage rates. We're going to get into it. We're going to talk about the demand, the supply, the lending, and everything in between. But let's start off right here on a little bit of a lighter note. Santa Claus, he is going to be laid off. He won't be coming to Macy's this year. Now, if Santa gets his home foreclosed up there in the North Pole, I will be the first to report on that. You can bet that. But just another sign of where things are headed in this economy, all right? Now, you would think the demand for Santa would be even higher. People want free toys, right? All right, on a serious note, let's get into the housing market news. Let's start right here. Thank you to the Fed, because mortgage rates have hit another low. Another 30-year low at 2.8% for a 30-year mortgage. And that is the 11th time this year that mortgage rates have hit another low. Now let's rewind back to when these shutdowns began back in March because of the sickness. People were saying the market's going to crash. Home prices are going to fall to the basement. There's going to be major buying opportunities. I said, wait a minute, not so fast. They can keep this market propped up. They can keep lowering the rates. They can deregulate the banks, which they have been doing, and they're continuing to do. We're going to talk about the loosening lending standards. We're going to talk about that a little bit later. We also have the work-at-home craze where people, renters especially, were leaving the larger cities and going to buy homes in lower-priced areas. We also had a lot of sellers pull their homes off of the market, and a lot of people didn't want to have people coming to visit their homes with this whole illness scare that has been happening now for going on 7 months. Okay, there's a lot of moving parts, a lot of information to get into, but let's start with a few charts. Beginning right here out of the St. Louis Fed, this is months of supply of houses in the United States. And we go back and we see we are at a multi-year low in inventory. So the demand has skyrocketed since the shutdown. Now it's pretty interesting because if you look to the far right here, we see at the very beginning of the shutdown here, March and April, we saw inventory climb as banks really pulled back on the lending. People were scared to move. People didn't know if they were going to be laid off, or people didn't know if they were going to be able to work from home. So inventory climbed at the very beginning, and a lot of people said this is the beginning of the crash. We said, wait a minute, it's 2020. They're not going to let that happen. And now you see what happened, a record decline in inventory. Now let's go out to a maximum chart here, 25 years. And we see this as the lowest in over 25 years, the lowest inventory. Okay, we're going to get into some pricing and some numbers here, home price information. But this should prove to you and show you that if they want to keep something propped up, even if it already is a bubble, and home prices have surpassed the 2008 peak for many months now, for actually over a year now. But it doesn't mean they can't inflate it further. Let's take a look at some recent reports here. Mortgage market opens back up. And it's true that they are continuing to loosen the lending. This eventually is going to end very badly. But for now, mortgage markets open back up to iffy borrowers. This is out of Banker and Tradesman. Another article here out of abc10.com. Lenders for mortgages are loosening up after tightening restrictions. Right, the bank deregulation, the lower mortgage rates, the loosening of the lending standards, it's all adding up. The surge in demand, the work-at-home craze, the people leaving the big cities, it's all adding up to the housing bubble getting bigger. And add on top of that, here's the cherry on the top, another extension of mortgage forbearance. Yes, now it's going to be through the end of the year, December 31st. Will they keep on extending it? Will it be extend, lend, and pretend forever? Or is 2021 going to be a housing market bloodbath? We'll have to see. The problem with a manipulated market is you don't know how far the manipulators are going to take it. And we know that more and more people are going to FHA loans because there's the lower down payment requirement. So this is a big chunk of the mortgage market, and now we have the extended forbearances along with the other forbearances, and add on top of that all of the other rescue programs that are in place that normally would put people in a lot worse financial position. We have student loans being paused. We have utility bills in some cases being paused. Rents. We have even car payments being paused in some cases. Recent Redfin article, home prices soared 14% in September, a record-setting month for price, sales, and speed. This is just the opposite of what most people said would happen. Folks, this should be a lesson. In a manipulated market, they can keep the bubble going as long as they want to. And folks, you may find this impossible to believe, but they can make home prices go up for years if they want to. It's called hyperinflation. That's what happens when you have a baseless currency that can be created out of thin air. Banks can lend into infinity. They can create digital dollars out of nothing. It's just digits on a screen. It's just data on a hard drive. It's not real money. And when you have the possibility of creating infinite money, you have the possibility of infinite price growth. Will Americans be walking around with wheelbarrows full of money like we saw in some other hyperinflated currency countries? Well, nobody knows. If we ever go back to a true free market, you could see prices collapse, because then you will not have this manipulation, this intervention, artificially low rates. If we ever go back to a currency that's actually backed by a hard asset, we're not talking about oil, we're talking about something that can be convertible from the dollar to the metal, in this case precious metals. You may want to get yourself some precious metals. If you haven't started hedging already, you need this insurance. Link down below, SD Bullion. I just got another shipment, 15 ounces. Just buy it when you can. Protect yourself, because we're going into some very, very troublesome economic times. All right, inflation, deflation, either way, protect yourself, be prepared. And it's very difficult right now for a lot of people to figure out how to prepare. I've talked to people, I've spoken to many people that are in all cash because they expect deflation. They think the manipulation is coming to an end very soon. In 2021, they expect a bloodbath. And I speak to people on the opposite end. People are in heavy precious metal investments. People are buying real estate because they think the inflation is never going to stop. Again, trying to figure out the manipulation or trying to read the minds of the manipulators. It's not easy. So prepare. Both sides. Let me know what you're doing. What do you think? Let me know down below. Housing bubble, it's gotten bigger. Is it going to get even bigger in 2021? What lies ahead of us? You let me know. Thanks for watching this report. Today's episode is sponsored by Boxable Homes. These are high quality, sturdy homes that can be even hauled using a pickup truck. Boxable homes fit a lot of luxury in a small, inexpensive, energy efficient space. These homes are factory built in the USA and can be shipped to all 50 states and internationally. These homes come fully loaded with wiring, heating, cooling, plumbing, and appliances. Have some extra space in your yard? These will make excellent supplemental income properties, granny flats, or guest homes. These homes are built tough and can withstand fire and weather disasters. Save $100 off your new Boxable home today by clicking the link below.